It's Business Morning here on Channels Television, and the focus is on the no decision reached by the Monetary Policy Committee to keep all rates on hold. Still here in the studios is economist and financial research analyst Bismarck Rwani. He's the Managing Director and Chief Executive Officer at Financial Derivatives Company Limited. Thank you so much, Mr. Rwani, for sticking around. Yeah. So just before we came on, of course, we saw some slides on TV there, the outlook for April. But just before we get to the outlook for April, let's talk about how sustainable this current lending rates is going to be in the banking system, especially considering that the banking system credit to the economy rose from 1.5% in December last year to about 7.1% in January this year.
Yes, let's step back and see the consequence of what happened yesterday. First and foremost, the equity markets went up. Therefore, they were oblivious to that decision. The exchange rate stayed stable. The interbank closed at about 198, 199, and the parallel market stayed at about 225. So there was stability in the exchange rate market. The foreign exchange reserves are barely at about 30, gross 30, but really about $29 billion. In real terms, that is adequate, but not so adequate. In other words, the reserves are under pressure. And once you cross that psychological resistance of 30, there could be additional pressure. But that is to be expected in an electoral cycle that we are in. I think that the real question is, what is the central bank going to do about interest rates in the coming cycle? First of all, we don't have to wait for another ritual of an MPC. Immediately after the elections, the central bank will research it and decide, one, can we allow interest rates to come down and allow some liquidity in the system, whilst we allow the current foreign exchange system to play itself out. The major question again, will interest rates come down? Second question, will there be another devaluation of the currency? And what does that mean? So let's take the question of the exchange rate. The lower the exchange, that is, the more expensive dollars are, the less the quantity demanded. So if you are buying $100 million when it was 200, if it goes to 205, you will buy less because there's a constraint to how much money you have. So if you take the assumption that the more expensive the currency is, the lower the demand, it means that over time, Nigerians will be demanding less and less foreign exchange, and therefore there will be stability, and the reserve depletion rate will slow, and that is what has been happening. Having said that, does it therefore make sense to keep interest rates at a high level? There's a school of thought that says you need to keep it at a high level. But in reality, what the central bank will need to do is to allow interest rates to come down. Interest rates to come down because you have to really jumpstart this economy and get it going again. There are developmental goals which the central bank governor has been talking about. I want to create jobs, I want to make sure there's growth, I want to do this. But to do that in an environment of high interest rates which are strangulating will be very difficult. But the first thing is to stabilize the economy, which is what they have done. And after the elections and all the question of stability and all that over, we have to deal with the strategic issues of what rate of interest is viable to keep this economy on its current path. If you take the rate of interest and look at the inflation differential between the US and Nigeria is 7%, while the interest rate differential is almost 13%. Which means that you have room to bring down the interest rates. So right now, what we have is we have carry trade. There are people who are bringing money in dollars and taking it out. All of that will have to stop. The reason why there's a carry trade advantage is because there's a gap between the exchange rate and the interest rate differential. And that the public listening to us are not interested in all of that. All they want to know is that, am I going to be paying 225 naira or 226 naira for a dollar this week? You will continue to pay that in the parallel market. You will continue to pay average of 199 to 202 naira for a dollar in the interbank market for the next 2 to 3 weeks. But after that, we are going to see some probably appreciation of the parallel market and a little bit of depreciation at the interbank market. That is the reality.
Okay, what about at the treasury bills and the bonds market?
Well, treasury bills, because the treasury bill rates are pretty high. The yield yesterday, 14.89 stop rate, yield of about 16%. Yeah. And if you take the fact that you don't even pay taxes on treasury bill revenues, the effective return is almost 19%. That is very high. Because first and foremost, treasury bill revenues are not taxable. Secondly, that is extremely high. We need to bring those rates down. So you find that international investors are coming in, buying those treasury bills and converting the money and taking it out, right? So I think that a strategic decision as to how to manage those rates downwards, right, so that there's some equilibrium and stability is a very important issue. But that will not come on until after. You can't do this before an election.
What about the bonds market? Are we going to also see the same kind of movement towards it?
Well, I think so. I think so. The bonds are government debt right now. And basically, at the end of the day, the central bank talked about, I can't do much about the fiscal policy. As long as you are going to be funding government expenditure, and the government has to issue those papers, then we have to put out those bonds, and they have to be paid for. I think the bond market that we are going to see a drop off in those rates sooner or later as well.
So now, would this decision actually make investors go long or short on treasury bills and bonds?
Yes, I think you take a long position, because if rates are going to come down, you might as well lock in now. So when the rates come down, the price of those bonds will go up, and you sell and get out. So bonds are priced on a yield to maturity basis. So that's a no-brainer.
All right. So let's take a look at the outlook that
For April.
the FDC actually came up with for April. You're expecting mild recovery after a transparent election.
Yes.
Hopefully, if all goes according to plan, less than 48 hours now we're going to the polls to elect a president. Yes. But let's talk about, for instance, the Naira.
Well, the Naira will stay. Look, if anybody was going to run away from Nigeria, the person has already run away, and anybody who has not run away is stuck in. So it stays between 198 and 202 in terms of its the interbank market, and the power market will still remain at about 225, 227. Nothing against the pound, it will be about 335. Nothing is going to change, right? And the flights are already fully. Those who are going out have gone. Those who are coming in have already come in. So you and I have to be here on Saturday anyway. So that's what's going to. Nothing's going to change. Interest rates will remain the same. Nobody's going to change until the central bank gives a direction. And more than anything else, the banking system is going to remain stable and robust.
Yeah, but you see, a lot of people are kind of worried about on-lending now. How badly is this going to be affected? Are they going to see an increase? Are they going to see a decrease? Or are we going to see a stifled growth for the real sector?
To be honest with you, Q1 growth was down. Q2 growth is going to be flat. And Q3, after the swearing in, we'll now see a recovery. And we're going to have that recovery that will go all the way to the end of. There will be a supplementary budget. Whatever budget is being discussed now, approved now, is all by outgoing legislators. We're going to have a new supplementary budget which will deal with the reality of our Nigerian situation. And then we will see a slight recovery. 2016 is going to be a very, very positive and aggressive year where everything is stable and everybody begins to come back to a table. And that's what you're going to see.
Yes, but still going forward and still looking at the second quarter, oil prices haven't really bottomed out. We're still seeing oil prices fluctuate
53, 54.
Very crazily. So we're still having that scenario to deal with. The committee, the Monetary Policy Committee is having that to deal with. The fiscal authority is also having that to deal with.
Yeah.
So going forward.
I don't want to paint a more than rosy picture. The reality is that for April 11 is another election. Nothing is going to happen in this market in April. Rates will remain about the same where they are. You're going to have banks publishing their results. Some of them
we're going to still have continued scarcity because the queues are back on the road.
Oh yes. The thing is the central bank is not charged with creating external reserves. They are charged with managing the external reserves that have been created. So there's no magician they're going to create anything. The reserves are under pressure. And whatever the reserves are, they have to manage them efficiently. The exchange rate will be managed in that context. Every other thing is outside the control of everybody. None of us can control the outcome of the election. None of us can control what's happening on the streets. The month of April is a month of nothing happening. And then after April, we begin to see the recovery as we go into the swearing in and transition and all of that.
Okay, are we also going to see a likely recovery also at the equities market? Because according to your analysis, yes, the equities market is supposed to gain some points. And what Rotimi was actually saying this morning was that the market's actually still on a wait-and-see kind of level. Hopefully, after the elections, we'll begin to see
Af-
more patronage.
Well, after the elections, my projection is that the equity markets will lose some steam between now and then. You can see the turnover is dropping.
Yes.
So, in the equity market, the normal rule of the thumb is that you buy on the rumor and sell on the news. So people have taken their positions, and some people are just going to liquefy. There are going to be a few dividend payments and corporate actions. You've seen Julius Berger, you've seen GT Bank and others.
Mobile as well.
All right, nothing significant. The devaluation is going to cut corporate earnings by about a minimum of 11%. And therefore, theoretically, we should see prices come down, stock prices come down. Some banks are going to raise additional money, but the central bank has deferred the implementation of the Basel Agreement shortly. So we're not going to see that dilutive effect right now. But definitely the stock market will be under a lot of pressure. But again, our projections for the stock market is that as from July, August, we are going to see a recovery. And that will probably coincide with the time when interest rates are going to start coming down in Nigeria, because interest rates have to come down. The economy cannot remain strangulated.
But that's concentrating so much on the monetary side. What about the fiscal side? The fiscal authorities at this time also need to work hand in hand with the monetary authorities.
The fiscal side is, one, they've got to collect additional revenues from all other sources. They've got to provide incentives for people to invest in the oil and gas sector. The fiscal pressure is going to be there because I suspect that the current cut in electricity tariff will be reversed immediately, because you cannot ask people to buy assets and then cut the revenue which they get. So that's not going to work. I mean, we are going to go. So I assume that they're going to go back to the higher tariff regime to make sure that the power, the discos and gencos work, because power is a key to everything. I suspect that we are going to have some kind of realignment of petrol prices, right, to reflect the reality of, so that we stop having queues. So there's a lot of work to be done on the fiscal side. But all of that depends on how, none of this can happen until after the elections and there's a new team in place. No matter the outcome of the election, there'll be a new team in town to work on these fiscal policies. So
in the next 48 hours is the election.
It's critical.
Very, very critical. Everybody is going to adopt a wait-and-see attitude. But Mr. Bismarck Romani, thank you so much for joining me on the program and sharing your thoughts with us on This Morning.
Thank you, Harriet.
Well, Business Morning continues in just a moment. Please join me again.